We had a wedge on the 60-minute chart without a good sell signal bar yesterday, and we broke to the upside. Might go up for a measured move. And then on the 5-minute chart, let me just measured move is around 28.60. And then on the 5-minute chart, we finished with a wedge rally in a buy climax yesterday. The bears probably will need a micro double top. When you have a very strong bull trend day like we had yesterday, only a 25% chance we're going to get a second big bull trend day today. 50% chance we'll have at least a couple hours of sideways to down trading that starts by the end of the second hour. I'm on the phone. I'm on hold with TradeStation because there is a incompatibility issue with Microsoft, and I applied, and my system was crashing yesterday and today. I went to the website. They told me to download a patch, which I downloaded, and now I cannot get TradeStation to open. And I've been on hold with them for about 45 minutes waiting for them to tell me how to get my TradeStation operating on my other computer. So I'm still on hold, and if they pick up, I'll take the call, and I'll stop talking here until I get that fixed. Anyway, the odds are we're going to get at least a little follow through and at least a micro double top after yesterday's. This is a parabolic wedge. 1, 2, 3. This was strong enough for a second leg up, which we have. This might be strong enough up for one more leg up. We probably need at least a micro double top before the bears can have a swing down. Odds are we're going to get at least a couple hours of trading range trading today. I think the weekly chart is interesting. We had a buy climax here and then a pause bar here. The bulls are trying to get a follow-through rally this week, and they might. But if they do, then it would be similar to what I just talked about on the 5-minute chart. Strong breakout, probably a little bit more up, but probably not a lot more up. Strong breakout, maybe a little bit more up, probably not a lot more up. That means this week will either be a pause bar like last week, a small body, or it'll probably lead to a 2-bar reversal up this week, down next week. If it's a pause bar this week, small body, that means the second half of the week will sell off and the market will get closed below its midpoint, maybe down near its down near the open. Finished yesterday, obviously always in long. TradeStation on my other computer. I've been doing all the things that the chat online has told me to do, and it finally looks like it's opening. We'll see. But I'm still on hold.
We apologize for the delay. Please continue to hold for the next available representative.
Right now on my other computer, the columns, all I get is the symbol column in the quote screen. I can't get other columns, and it will not allow me to format. If I click here, it allows me to format the page, and when I do it on the other computer, I do not have the option to format the page. When you have a strong rally like this, like the whole day yesterday, you have a 50% chance of follow through buying on the open the next day, today. But as I said, 75% chance we're going to have at least a couple hours of sideways to down trading. Can we quickly reverse this pair of buy climaxes? not likely. Always in long, you can see as soon as one had a bull body, they bought the market. You can see two opened above one, but you get three dojis here, a doji here, and you have a wedge top. So even though we have a measured move target on the 60-minute chart up here, there's hesitation right now on the 5-minute chart. Bears want to get a failed breakout of yesterday's high, and this would be a micro double top, so that would be the minimum that the bears need. For the bears, possible high of the day. In general, the first bar has a 20% chance of being the high and a 20% chance of being the low. If 2 closes on its low, and if it has at least a 2-tick body, it would have a 25% chance of being the high of the day. Still not a strong sell. Consecutive bull bars by the close, but it's the third buy climax and it's weaker than the first two. Here's the first buy climax, 3 bars. Second one, 2 bars. Third one here, but small bars. Still, maybe 25% chance we've seen the low of the day. Yesterday was a trend from the open bull trend. If you look at charts over the past month or two, and look at the number of days where the first bar is the low of the day, or the first bar is the high of the day, it's about 1 out of 5. Sometimes you'll get 3 or 4 days in a row where the first bar is the high or low of the day. But over the course of a lot of days, you'll see that the first bar is only the low or high about 20% of the time. Not a good sell signal bar for the bears, but not a particularly big bar for the bulls, and it follows 4 dojis. So buy the close, but not strongly bullish. Magnet at 2860, too far to get there today. That's 25 points above where we are. And I don't know that we get there at all, but we might.
I apologize for the delay. Please continue to hold for the next available representative.
It's funny, on trade stations, hold, they used to say that a representative will be with you shortly, and that's never true. So now they just say, please hold for the next available representative. Daily chart, biggest bar in probably 50 days, 60, 80 days. That's the single biggest bull body on the screen, so like 100 days. Climactic, but the bears need a reversal, and when the channel is this tight, the first reversal is probably minor. Target for the bulls, the bottom of the buy climax. Weekly chart, target for the bears, the bottom of the buy climax. And weekly chart, big buy climax, target for the bears here. But no top yet. And when a bull trend is this strong, even if we collapse, 10%, 15%, bulls will still buy it. The bulls are very, very aggressive. Look at the monthly chart, right? Buy climax, target is the bottom of the buy climax, which is also the open of the year. But even if the bears get the reversal, the odds are the best they'll get is a few bars sideways and a bull flag. This is extremely strongly up. I said that 50% chance we get follow-through buying for the first hour or so, which we're getting, but only a 25% chance of another strong bull trend day, and 75% chance whatever rally we get here over the first hour will be followed by a trading range.
I apologize for the delay. Your call will be answered.
Series of buy climaxes in a tight channel. 1, 2, 3. So it's a parabolic wedge rally. The odds are we'll get 10 bars sideways to down soon. In addition, the odds are we'll have a couple hours of trading range trading, but right now this is by the close. I did not buy it. I got too much going on with trying to do the 6:45 update and then waiting for TradeStation to pick up. However, I think it's kind of a risky thing to do because it's a parabolic wedge rally.
I apologize for the delay. Please continue to hold for the next available representative.
Bulls will get out probably below a decent bear bar, with maybe a 2 or 3 tick body closing on its low. But if a bear bar has a 2 or 3 tick tail on the bottom, a lot of the bulls will wait to see if the bears get a bear bar closing on its low, or they'll wait to see if the bears can get a series of bear bars. Testing the Globex high. The bears want a double top, break below the neckline, measured move down, not likely. And the bulls want a breakout and measured move up, also not very likely after such a strong sell-off. Still by the close, and the bodies are getting bigger. 1, 2, 3, 4. So the momentum is picking up, but climactic. First reversal down after 4 bull bodies. Chances are not a lot of traders would sell it. Probably buyers below 5. I want to check something here. Okay. So let's say we get a great bear bar, big bar closing on its low. Is it the high of the day? Well, it's a parabolic wedge rally, a series of 3 or more buy climaxes in a tight channel, so it could be. What's the probability of it? Right now, probably 25%, even if it's a really good-looking bear bar, because the initial rally is strong enough so that the bears will probably need at least a micro double top. It creates a problem for buy the close bulls. If you bought the 4 close, what are you thinking now? You know you're buying in a parabolic wedge rally, and that one of these reversals can be the high of the day. So it creates a problem for the bulls. They're trying to prevent the bar from closing on its low. If they can get a 2 or 3 tick tail on the bottom, they know the odds are there'll be buyers below the bar. On the other hand, if it closes on its low or has only a 1 tick bear body, I think most bulls will get out. Aggressive bears will short, and it's one of those risk-reward trades. They're shorting, taking a chance that this is the high of the day. So they're shorting with not much risk, looking for big reward, and that means the probability is not yet high. Higher probability after we get a few consecutive bear bars. When you have a parabolic wedge top like this and it becomes the high of the day, it usually does not go straight down. You usually get an endless pullback, 2, 3, 4, 5, 6 bars. It looks like TradeStation's picking up. Huge reversal down, always in short. Right now, 70% chance we've seen the high of the day. I'm on hold. I'm talking with TradeStation on the other phone. Probably going to go sideways here. Unusual to go big up, big down into a bear trend, so we're probably going to go sideways here. However, 70% chance this is the high of the day. I'm speaking with TradeStation on my other computer, this computer crashed while we're trying to fix the other computer. Big up, big down, big confusion, trading range. Still 70% chance. We've seen the high of the day. Remember, coming into the day, we knew there would be a 70% chance that the market would enter a trading range by the end of the second hour. And this is the start of it. Big up, big down, big confusion, sideways here. Bulls have bought this. You know, they might buy it for a swing, but I think it's a scalp and that we're probably going to go sideways. I think the parabolic wedge is more important than the bigger wedge. Can you sell with the...
Okay.
I didn't. I'm not trading right now because I'm with TradeStation on the other line, but probably this rally is going to stall. Not a great limit order rally after a good bull bar and a bull trend, but chances are we've seen the high of the day. And if we get above this high, probably sellers above. I'm still on the phone with TradeStation trying to get my other computer fixed. This is still probably going to be sideways for a couple of hours. I'm still with TradeStation on the other computer. The bears need a sell signal bar here for a swing down. With TradeStation, I have on both computers, I have my backup stored in the cloud, so I can easily, if something goes wrong with one computer, I can easily restore based upon the file from the other computer. And it turns out that's not how TradeStation works. And if you put it in the cloud, even though it looks like everything is being saved, it's not. It's but I'm not surprised with TradeStation because they write so many stupid things. So you have to go in and there are 3 dots to the right of the different items in backup, and you have to go to the 3 dots and then individually take each one of those little lines and make sure it goes to where you want things backed up. Anyway, I'm looking to sell here. Spike, pullback channel, so 1 push, 2 push, 3 push, but the bears need a good sell signal bar. Bulls know that this reversal is strong enough to make a trading range likely, and therefore the bulls are scalping. So they buy and sell. They buy and sell. We're in the sell zone around the high of the day. What are the chances that today can be a big bull trend day? Small. Whenever you have a bunch of big bear bars early in the day, the odds are the day is not going to be a bull trend day. Or if it's going to be a bull trend day, it will not be a strong bull trend day. And that leaves you with a trading range day or a bear day. When yesterday looks like this, the odds are against today being a big bear day. And therefore, today is probably going to be mostly sideways. I'm going to turn off the screen and open up my PowerPoint of examples. Big bull trend days typically do not begin when you have a series of big bear bars on the open, even though you have a rally here. You know, this really reduces the chances. The bulls are hoping this is a double bottom, a bull II closing on its high, and they're hoping it's the start of a bull trend day, and that there's a potential double top here. If we break above this, then we're breaking above a double top. Even if it never hesitates here, it's a potential double top, and the target for the bulls would be a measured move up. The bears want the double top, break below the neckline, and a measured move down. Most likely, we're going to be sideways for at least another hour. days that are going to be bull trend days start with bull bars, not with a bunch of big bear bars. They start with bull bars. We had some bear bars, but these are small. The bulls got their double bottom. The bulls are trying to get their double bottom here, but these two bars are a big problem for the bulls. And even this, even though we rallied, look what happened. We sold off again, and we came back to the breakout point. Not consecutive big bear bars, but enough big bear bars to make a big bull trend day unlikely. We rallied, but not a big bull trend day. This is a little bit like today, but today is even more bearish. And you can see, even though we rallied, we came back down. We got a reversal day. One big bear bar, not two or three. The bulls were able to get a bull trend. This is like today. When you get a bunch of big bear bars, the best the bulls will get is probably a trading range day. Like today, a pair of big bear bars. We got a new high, but the day ended up as a trading range day. A bunch of big bear bars, but rally yesterday, gap up rally, unlikely to become a huge bear day. It sold off and we went sideways. You know, this is probably what today will be. And therefore, any rally is a bull leg in a trading range, and any sell-off is a bear leg in a trading range. So the odds are it's sideways. Not a good sell signal bar 16, not a good buy signal bar 16. We're near the top of what is probably going to be a trading range day. So bears will start to sell, but with four bull bodies here, not a lot of bears are going to sell below a doji 16. There will be sellers 16 high, and there will be sellers above the high of the day. And we can rally, but if we do, it's probably not going to result in a big bull trend, right? You know, here, a weak rally kept going up, but ultimately reversed. Sorry about that. I'm having a bad day with TradeStation on both computers. This computer has crashed twice today. Okay, the bears are trying to get a wedge top. Instead, we're getting a bull breakout. So the bulls are hoping for a measured move up. I think we're always in long at this point. You know, you could argue we're always in long on bar 10. This bar, I think, creates a problem for the bears. They had a wedge top. We're getting a little breakout. Odds are we'll get at least two legs up. In part, it depends on where it closes. If it closes on its high, probably two legs up. If it closes below the high, the early high of the day, then less certain, it increases the chances that the breakout will fail. Good bar for the bulls. They need one more bar, but the context is good. We have a bull breakout above a wedge, and we're in a bull trend. So right now the odds are we're going higher. Obviously, 19 is important. You know, if the bulls get a follow-through bar, then we'll probably get at least a couple legs up. If the bears want a bear bar, they want the breakout above the wedge and above the high of the day to fail. Fighting over the close of the bar. Can you short below 19? If it's a pretty good bear bar, sure. But if it's anything less than a 2 or 3 tick bear bar closing on its low, and look at that in the final seconds. The bears are trying to get their reversal. If it closes on its low, it's an okay swing short. Higher high, major trend reversal, fail breakout, high of the day. The bulls are trying hard to prevent it from closing on its low. I bought the close of 18 and scalped out 1 point because I was not sure what 19 would be. But that's good enough for the bulls. They did the minimum necessary. They avoided a bear bar. Therefore, probably buyers below 19. This is a breakout above the 18 bar range. Even though it may not look like it because of the reversal today, there's still a 90% chance we're not going to fall below the low 6, like in those examples. I'm going to open up the example file again. Those examples where big sell-off, new high, sold off again, but could not get below the low. Big sell-off, new high, no strong rally, but could not get below this low. Big sell-off, did not get to new high, but still did not get down to the low. Strong rally, this is not like today. This kind of thing is more like today. Earlier down here, I thought 70% chance we would not go above here, but we did. Strong enough for reversal, the probability start to go down. And at this point, probably 90% chance we're not going to go below 6. I'm going to turn the screen off for a second because of that backup thing that TradeStation told me, that you can't simply do a backup that for your workspaces you have to specify if you're not going to use the default location, then you have to specify where the workspaces will get backed up. Buyers or sellers, 19 low. Well, the absence of a bear body, probably buyers below. But I'm not buying it because big up, big down, big up, big confusion. And the bulls did not get good enough follow through. I scalped out, but if 19 closed on its high, I may have immediately bought again. I'm turning the screen off again. I remember there was one other thing. All my indicators were lost on my other computer. I had a backup, but that's another thing that they told me that I have to specify the location for that, for backing up of the indicators. So in TradeStation, you have to right click. This is the backup screen on TradeStation. For the ELD files, you have to specify a location where to back up. And also, I'm hiding it over here, but and the same with down here at Workspaces, you have to click these three dots and then specify the location if you're not using the default location. And I'm backing both computers up onto the cloud. That way, if one computer dies, I can, and both computers are set up the same way. So if one computer dies, I can simply go to, buy a new computer, go to the cloud, and restore to make it exactly like the other computer. I went by a pullback, bought a bear body, doji body. Now, if you're a buy the close bull 18, what are you thinking right now? Are you thinking, wow, it's still a great trade? Are you thinking this is not what I expected, and therefore maybe I should get out, break even around the close of 18? We're going to find that out over the next few bars. Yesterday, strong breakout, disappointment. A lot of the bulls who bought the 10 close decided, well, maybe I better exit, and maybe I can buy lower. And you can see 14 went above the 10 close and has a tail on top. The disappointed bulls who bought this close, disappointed by this, they decided to get out, break even, and then they waited to see if the market would reverse into a bear trend, in which case they do not want to buy, or if it was simply pulling back, and then they'll look to buy above a decent bull bar or on a breakout and follow through. So right now, this is what's going on here. The bulls are disappointed by 1920. We don't know if most of them will try to get out, break even with the 18 close. If that's the case, you'll get a tail above 20, and you'll get a micro double top and possibly a sideways to down like this, micro double top here. The buy the close bulls giving up. They gave up here. The final ones gave up here. We've got 2 legs down. Sometimes when they give up, you can get an opposite trend. Also, here, buy the closed bulls, disappointed, we got to swing down. That's why micro double bottoms and micro double tops are so important. Sell off, bears disappointed by this, they gave up, we got a micro double bottom and a swing up. So a lot of reversals come from micro double tops and micro double bottoms. Bulls, they're concerned, we got a big tail, a second big tail, and now the bulls are giving up and we got to swing down. Micro double tops and micro double bottoms look trivial, but they can lead to big reversals. Buy the closed bulls, they're disappointed, they try to get out, break even, it doesn't let them out. Usually if you do something reasonable, like buy the close in a strong trend, the market will let you avoid a loss if you can scale in lower. It usually allows you to make money. The buy the close bulls here, disappointed here, tried to get out, break even, they could not get out. If they buy again more above a bull bar, and the second entry is at least 2 to 3 times the size of a minimum scalp below, in other words, 2 or 3 points below, they usually can avoid a loss, and they usually can make a profit. Excuse me. And the bulls who bought this close, disappointed, bought more here, they could get out, break even, the midpoint of their 2 entries over here, or they can hold, and at this point, and when above this close, they can get out, break even on that first buy, and then with a profit on the second buy. Here's a double bottom instead of a micro double bottom, but the idea is the same. Some bears sold this close, disappointed by this. They decided to hold, sell more here. It did not quite get to their close. If they tried to get out, break even at the first sell, and you get a reversal here, especially a high 2, high 1, high 2, they give up and they buy back here with a small loss here and a bigger profit on their second entry below the bear bar here. Sell the closed bears, disappointed here, try to get out, break even, and look what happened. It got to within a tick of this close. It had to get below this close for them to get out, break even. They sell this, they sell more 2 points higher. They're disappointed by this, and they tried to get out and they could not. They tried to get out again, they raised their limit order to get out, they could not, and they give up here, and it led to a swing up. Every now and then I'll come across some website and they'll refer to stuff like that as noise. And that's just stupid. It's not noise. I'm telling you what traders do. I'm a trader. I've been trading for over 30 years. That's what I do. And I do it because that's what everybody's doing. And you know everybody's doing it because you can see what happens afterwards. You can see buy the closed bulls here and went one tick above that close. And a lot of the bulls gave up. They exited. They did not sell violently, so there's still some bulls holding on. We did not get a big reversal down. But the remaining bulls who did not use this opportunity to get out, break even, if this starts to go down, they'll sell and we can get a big bear bar, completely reversing 18, and it could start a swing down. Now, if you're a bull, what are you thinking? You're thinking, gosh, I should have gotten out back at that 21 high when it went one tick above 18. The bears are getting bear bars, but they're not getting big bear bars. The odds are this is a pullback from the 18 breakout and not an endless pullback that will lead to a bear breakout. So the odds still are that we'll go a little bit higher, but not strongly bullish. Here, strong breakout, we got one more leg up, and then we got the reversal. This reversal is stronger than the one we're having right now. So I think this is probably more what we're going to do, and I think we'll probably go higher. This is interesting here. The bulls, again, get an opportunity to get out if they bought the 18 close, and they're disappointed by this, right? So if 23 does not go a tick or two above 21, that increases the chances that we're going to get a reversal down on 24 or 25. The bulls have had two chances to give up, to get out without a loss. If the bulls do not get out, they're hoping that a lot of other bulls buy and we break strongly to the upside. If those bulls do not come in, then the bulls probably want to buy lower. And the bulls who bought that 18 close and who did not get out will give up on 24. And we could get a bear bar equal in size to this, just like this, a reversal up and then down. So 23, 24, important. The bulls need to get at least 2 ticks above 21. If they do, then other bulls will buy and will try to drift up higher. If they do not, especially if it stays a perfect double top 21, a lot of the bulls will give up. You always have to wait until the bar closes. Sometimes, you can see 19, it was a bull bar. In the final seconds, it became a bear bar, and then it became a doji bar. The market can do things quickly in the final seconds. This is good for the bulls, okay? We did not get a big tail on the top of 23. It increases the chances that we're going at least a little higher. And interesting, still cannot get above 21, so the bulls might be giving up here. This could be a bear bar in the start of a swing down. The bigger the bar is, the more it closes on its low, the more likely it's a give-up bar. and that would mean we'll probably get a couple legs down. When you get give up bars, sometimes the market goes sideways right afterwards, but give up bar sideways, but usually you get at least a second leg down. Here we got a third leg down. Give up bar, the bull's trying to resume, but a couple legs down, 2 or 2. What's important is the bar being big. The bears want a big give up bar. Big outside down give up bar. Bulls kept trying to get the breakout and failed. 2 minutes into the bar, and this is all we have. Right? This is not looking like bulls are panicking and giving up. So far, it's not a give up bar. Bulls are still buying. They bought below 23, for example, betting against the reversal down. We need more information. The bulls are not getting the breakout, and the bears are not making the bulls panic. And as long as it does not create the give up bar, the odds still favor the bulls. We're still always in long. Still always in long. The odds still favor the bulls. The bears want an endless pullback. They want the pullback to go to 10 bars, 15 bars, and then suddenly get a bear breakout. Big gap up, pullback. After 10 or 20 bars, you stop calling it a pullback and you call it a bear trend. Similar to today, break to new high and a pullback. This is possibly a give up bar. It turned out to be a give up bar. Breakout, second leg up here, and then pullback for a lot of bars. And then ultimately, we got a breakout and led to a reversal down. This is what the bears want. It's a bull flag. At some point, you call it a trading range. Once you think the probability is 50-50, up or down, and the bears got their breakout. In general, when there's an endless pullback, until you get the bear breakout, there's still a 60% chance of a bull breakout and only a 40% chance of the bear breakout. Once you get the bear breakout, you got to be thinking at least a couple legs down and some kind of a measured move down. Nobody wants to trade. The bars are small, the range is tight, and the probability is not high enough for the bulls or for the bears. Traders are looking for a breakout, either a bear give-up bar or a bull breakout. And getting near the bottom of the buy climax bar, 18. Bulls want a double bottom, 18 low and moving average, and bears want a breakout. The bears need, I think, a 2-bar breakout. Usually a 1-bar breakout is not enough. Yesterday, 1-bar breakout, not enough. 2-bar breakout, neither one big, still above the moving average. This is the one the bears needed. Here, the bears needed 3 bars. Here, the bears only needed 2. In general, you want 3 bars, especially if you're still above the moving average. Once you get below the moving average, 2 bear bars is probably enough to make it always in short. Bear bar, testing the 18 low, the bottom of the buy climax. Not a big bear bar, so not very bearish. Still always in long. One more bear bar, especially a big bear bar, would flip it to short. Always in long means it's still more likely to go up than down. Bears trying to get their breakout. They're trying to reverse 18. Bulls will try to put a big tail on the bottom of 27 and get the close at the moving average to undo the breakout. And the bears want the breakout to be like this, a fairly big bar. Even if it has a tail, as long as it's a pretty big bar, it's good. You can see all of this is taking place below the moving average. Bulls want the double bottom, 18 low at the moving average. Important bar. If it closes on its low, we'd probably be going to swing down. If it closes around the moving average, we're probably going to go sideways. By sideways, I mean it goes up and it goes down, right? So this is a minor reversal up, and it's probably more of a limit order market. Still always in long, but probably the bears will try to get a double top around 24, and then we'll come back down, and the bulls will try to get a double bottom, 27 here, and who knows, 35, 40, somewhere in there. We're probably always in short. We're getting too many bear bars. However, it's still probably going to get a bounce in a trading range. So I think it'll be like those give up bars that I showed, where you get a second leg down, but you bounce first. Bounce and then second or second. So this is probably what the next couple of hours look like. Give up, bounce, and then second leg down. Stop for the swing bears above 24. If we're going to bounce, can the bulls buy? I would not buy below 28. I think it's easier to make money selling a rally than it is to be buying. I don't like, if I think the market's always in short, and I do, I don't want to be buying below a bear bar closing on its low. And this is a special circumstance. We have a weak give up bar. Chances are we're going to get a bounce, but I still am not willing to take that buy. On a smaller time frame chart, probably a parabolic wedge, down, up, down, up, down. Not a great stop order buy. Too many bear bars, but probably are going to bounce here. What do traders do? It's still always in short, but a trading range is likely. We're probably going to try to get up to the 24 top of this sell-off. Bears can get out above 29, but I think we're always in short, and therefore they're going to be selling again. For the bulls, it's not a great looking stop entry buy. Maybe if we get sideways 2 or 3 bars and a bull bar on 30, maybe, okay, that's interesting, right? For the bears, it's a pullback in a bear trend, so it's a low one short, but only a 2-tick bear body and a fairly prominent tail. So there might be more buyers at the 30 low than sellers. So that's actually good for the bulls. It's a bad sell setup. Like most bulls scalped, right? They bought the 30 low, bad sell signal. They might hold part for a test up here, but a lot of them will scalp for 1 point, betting that instead we might go sideways. We're around a 50% pullback of this rally, and a lot of times when the market pulls back 50%, but becomes always in short, it'll go sideways more before deciding whether to test the high or continue down. I scalped. I just took 1 point. The bears, they have a low 2 here, so a low 3 triangle. But the sell-off is not all that strong. Therefore, a lot of bears do not want to sell low. They want to sell higher. So I still think we're going to test up higher. I think it's a weak give-up bar, and that will have to retrace at least half of the original sell-off. So here's that sell-off. We'll probably get at least up to here. But I also think we're going lower. I think we're always in short. Spike pullback, parabolic channel. This is a reasonable target. I'm back to flat, and I want to sell, but I want to sell higher. I'm going to do a little backup that TradeStation told me to do. They told me that because I have a lot of indicators, I should export my indicators and not rely on the TradeStation backup. So I'm doing that now. There are all these little things with TradeStation that they don't tell you. So right now I'm exporting all my indicators as an ELD file. On my other computer, the problem that developed this morning, it lost even simple indicators like the 20-bar exponential moving average. It lost everything. It lost the 60-minute moving average on the 5-minute chart. It lost the lines that I use on the tick chart. It's about 30% done with the export. On the 5-minute chart, the bulls are trying to create a base. They want to bounce. I think the odds are we're going to bounce, but I think we're going to form a lower high and then get a second leg down at some point in the next hour or so. The sell-off is stalling. We were in a tight trading range, about 50% down from the high. About 60% done with the export of my indicators into an ELD file. The highest probability thing that we knew coming into today was that today would have at least 2 hours of trading range trading. About 90% done. I also have indicators. I've written hundreds of indicators years ago, and I don't want to lose them, so I'm saving them as well. And most of them I haven't looked at in years. Okay, so that export is done. Okay, not a good looking sell signal bar 31. I did not buy it. Right, I bought below 30, but I'm not buying a second time down. The bulls should have been able to get a better bounce, and they did not. So it increases the chances that we're not going to get the lower high, and instead we're just going to go straight down to the 11 low. Spike, pullback channel, reversal down, target bottom of the channel. Buy climax often leads to a measured move up or down. If down, takes us down to the area of the bottom of the first pullback after the reversal up. So I think we're coming down here at some point today, but right now I still think it's slightly more likely that we're going to go up before we go down. Chance of a big trend day up or down, I don't think so. Maybe 30% chance. This is probably today. Well, the bulls will high to buy above 29, above 34. Gap bars, arguably a pullback in a bull trend. I still think always in short, and I think 26, 27, 28 strong enough so that we'll get a second leg down, but we might rally first. Here, after the give-up bar, we rallied and we went sideways for several hours before we got to a new low. Here, sideways for about 10 bars. Give-up bar, sideways for hours What do the bulls need to make it always in long again? Obviously, if they get 4 small consecutive bull bars like this, 4 or 5 bull bars, that would probably do it. If they get 2 big bull bars like this, that would do it. But otherwise, the odds are we'll stay below the 24 high. We might test the high of the day again. We sold off at that price. We went above it, and we sold off again. So it's an important price. It's also the bottom of this tight trading range. So, we may get up somewhere up in here. Look at the open of 35 above the close of 34. As soon as bulls saw the bull body 34, they bought, taking a chance that it was a sign that the bears are losing control and that we're going to go up here somewhere. Not a good stop entry market. We're in a bear trend, and the bears could not make money selling below 30 or below 32, and the bulls so far have not made money above 29 or 34, although I think the odds are we're probably going to bounce. The issue is the moving average. The bears are trying to stop the bulls at the moving average and get the bulls to give up. And the bulls want to get to the next resistance level. They want to get above the moving average, and then the 22 low, the 5 high, and maybe all the way up to the 24 high. This is why I would not buy with a stop when the channel is tight. The probability is just not high enough. I am flat. I did not buy above 34. I did not sell above 34. We're in a tight trading range. So that's weak follow through after the selling. The breakout 27 has that big tail. So it looks confusing, up and down, right? So you got to assume up follows down. And this is not strong enough for me to be selling down here. So right now I'm trapped out. Getting near the end of the end of the third hour. First 2 hours were bull bars on the 60-minute chart, but not big. Parabolic wedge, 1, 2, 3, 4, right? So similar to the 5-minute chart. Parabolic wedge rally here. 2 minutes left. The bulls want a bull body this hour, which means they needed to close above the open of bar 25, which was the first bar of the hour. 2 minutes left, not likely to get all the way above the 25 open. So the third hour is probably going to have a bear body. What about stop order bears selling? We have a double top bear flag, 31, 35. The tight trading range and the prominent tails lower the probability for both the bulls and bears, even though we're always in short. Most bears want to sell a rally, and most bulls are looking for a better bottom or for a strong reversal up. Bulls trying to break above the moving average. They want to get above the 24 high, but they're happy just to get it to go up to this general area. I think the odds are we're going to go up, but I also think that we'll form a lower high and that we're always in short. Bears trying to get their breakout. Next target, yesterday's high, the 12 low, the 11 low. Bulls want the tight trading range to continue. Looks like a lot of the bears were sold below 38, scalped. It had to fall 6 ticks, which it did. But I think the odds are we're starting to go down. The bulls keep trying to get above the moving average, and they keep failing. And therefore, the market will try to get down to a price where bulls might be more willing to buy. Bulls trying to get a double bottom 33, slightly higher low above 29. And the bears want to break below 29 and then get down to the next support levels. Always in short, but not strongly bearish. Bears want a follow-through bar. Bulls want a reversal. They want the tight trading range to continue, and they want a double bottom higher low with 33. 33, one tick above 29. You still have some bulls who bought above 29 and who put a stop below 29. They're buying down here, trying to prevent their stop from being hit. Slightly more bearish than bullish, but not very bearish at all. You know, why do we spend so much time going sideways if the bears are in control? Next support zone, the 12 buy signal bar low, and the pullback low, the 11 low, and possibly the low of the day, but I doubt we'll get down to the low of the day. Buy climax yesterday. The bears want a bear body, so they want the day to close below the open. Here's the open of the day. So the open of the day might end up being the most important price of the day. At the end of the day, the market will decide whether to close below it and create a better sell signal bar for tomorrow, or close above it, especially far above it, and then not many traders would sell below. Remember, this week might be a reversal week. Last week we sold off, reversed up. And this week we might rally and reverse down and have an opposite doji. So doji tail on the bottom last week, maybe doji tail on top this week. Tight trading range, magnet. We have a bear breakout. Bulls want it to fail. Fairly tight channel down from the high. So not a very good stop entry buy. Always in short, but this is a problem. It's a possible final flag. So sell off, tight trading range, and then reversal. Most bears are scalping. Not a very good looking stop entry buy, but I would not sell above 41, right? We're breaking below a tight trading range. We're in the middle of a trading range day. This is the buy zone. Limit order bulls who bought the 29 low have not yet. Well, they tried to buy more 1 point lower. If I buy that low and try to buy more 1 point lower and do not get filled, I usually get out break even at my first entry. The limit order bulls who bought the 29 low have their 5 tick bounce. It rallied 5 ticks above, so they made their 1 point. So limit order bears are still limit order bulls are still making money. So not strongly bearish. Always in bears, I would get out. This is possibly a final flag. So even though we're still always in short, I would get out. And for the bulls, not high enough probability for a scalp. You can swing, taking a chance that we're going up here, but I think more likely we're going to go sideways. The bulls have been unable to get above the moving average until they strongly get above it, or until they create a more convincing bottom. The odds are we'll continue sideways. This is bar 42, a multiple of 3, so it corresponds to the close of the 15-minute bar. And you can see the 15-minute bulls are trying to get a second reversal. They tried here, failed. We have an II bear breakout. day session 15-minute chart, trying to form a buy after a failed breakout below an II. Still higher lows and a bull trend. It still looks like we're going to get some kind of a rally. Bears want 42 to close off its high. They're trying to prevent the 15-minute bar from looking good. Closing on the high, bar 42, so a good-looking bull bar on the 15-minute chart, holding above the 15-minute moving average, but an 8-bar bear microchannel, probably not going to be a big rally. Not a strong buy above 41 or above 42. We're still in the tight trading range. The bears want another failure at the moving average, but I think we're probably going up for at least a couple small legs. We have a tight trading range, a bear breakout, and then a reversal up in a trading range day. So probably a couple legs up here. I don't know if we get all the way up here, but I think we'll probably get above the tight range. The bears, a double top 38. Even though it's not a very strong reversal, the context is good. So probably buyers below 43. I think we're still always in short, but if we start to get 4 or 5 bull bars, something like this, then we would become always in long. Right now, probably 70% chance we've seen the high of the day, and maybe 70% chance we've seen the low of the day as well. Reversal, probably 2 legs sideways to up, so probably buyers below bars. Tight trading range, buyers below, sellers above, although I'd rather be buying for a second leg up than selling. Weak reversal, 4 of the past 5 bars are dojis, only 1 bull bar. Still in the tight trading range, but enough of a reversal so that the bulls probably will get at least a small second leg up. Limit order bulls bought 44 low, tried to buy 1 point lower, unable, and a lot of them will get out break even now that it's back to the 44 low. While still always in short, the odds are we're going higher, but not a great buy at the top of the range, more of a limit order market buying below bars. Looks like we're going to test the earlier high and these lows, but at this point I think it's likely that we've seen both the high and low of the day. Right now, it looks like we're going higher, but probably not a lot higher. Bulls want a gap above 44, but the bears probably will make money selling above. This is similar to this yesterday. Small bull bars, but once you get 4 or 5 of them, it increases the chances that you can get a sudden breakout. We're in the sell zone. The top of the sell climax, 24 high, and the 4 high. If the bears are lucky, they'll get a reversal bar here. Bulls want bar 75 and 76, a series of small bars, and then they want bull bodies to start expanding. 5 consecutive bull bars, not a good sell below 51. I sold the 44 high and then decided that we were probably going higher. So I placed a limit order to get out break even, which I did. We're in the sell zone, but too much momentum to sell yet. The bears have sold the 44 high, probably will make money. I thought about buying after I get out of my short and did not, even though I thought we were going higher, because I thought we might not go much higher. Well, the bulls we sold off, reversed up, and pulled back. So it's a cup and handle pattern, but not a typical one because the cup is so big, the handle is so big relative to the cup. We're in the sell zone, but with 6 or 7 bull bars, most bulls will need at least a micro double top before selling. Most bears will need at least a micro double top before selling. And a lot of bulls will not buy up here because the day is a trading range day, up and down and up and down and up, and then probably down. So it might be something like that. Gap up, big early sell-off. Usually does not end up as a big bull trend. It can go a little bit higher, not much. Early rally, but big bear bars early on increase the chances that the day is not going to close up at its high. 7 bull bars. Most bulls are not going to sell. Most bears are not going to sell with a stop below 54. They'll wait for a second entry short. And bulls, 7 bull bars, but a lot of the bulls will be hesitant to buy too high. They might wait for a couple of small legs sideways to down closer to the moving average. Odds are against the market going much higher. We might go above the high of the day. Sometimes you get a weird wedge where you get a reversal down, and third reversal down, and it does not look like a wedge at all. But it's still a type of a wedge, 3 reversals down. These are all wedges, but they're not illustrating what I wanted to show. I don't know if I have a version of it. I want to see if I have a bear version of it. Not really. I'll have to save something to show what I'm trying to illustrate. Where you get 3 pushes up and a reversal, but it does not have a wedge shape. Or 3 pushes down like this. 3 reversals up, 3 pushes down, but not a wedge shape, but you still get 2 legs up. A little bit like this, 1, 2, 3. I'm looking for a particular thing, and I'm not seeing what I'm trying to find. This is kind of it. 3 pushes up, 1, 2, 3. Does not look like a wedge at all. But it can act like a wedge, and you can get a swing down. Buyers here. Not a great looking buy. You can see we're testing the 44 high. The bulls want a breakout test and a big rally. They're hoping that it's similar to bar 60 yesterday. Tested the breakout point, could not fall below it, and then resumed up. And the bulls are hoping that we get a gap above 44 today, and then we continue up. Today is far less bullish than yesterday. While I think there are probably buyers here, I think the upside is not all that great. I think we'll get sellers around the 19 high. The bears right now are trying to get a lower high major trend reversal. Bull trend, bear breakout, lower high. But tight bull channel, usually only a minor reversal. Usually when you get a tight bull channel, the lower high or higher high has to go sideways more before the bears can get a reversal. And even then the odds are against the reversal. Big enough minor reversal so that we'll probably go sideways for several bars, and the bulls will need a double bottom around the moving average. How deep can this go? For the bears, lower high major trend reversal, but a very tight channel, probably a minor reversal. We're about a 50% pullback around the moving average, probably buyers in this general area. I want to buy, but if it keeps going down, I'll switch and I'll start selling closes. We're in the buy zone, the middle of that rally. But I'll need it to go sideways for a few bars before I buy. To sell, I probably would need one more bear bar after the current bar. I'm flat. I still think the odds are we'll bounce, but this is obviously much better for the bears than this. Usually when you have a pretty strong rally leading to a lower high major trend reversal, the bears need a double top, and that means the first reversal down is usually minor. The market usually has to get back up there and get a double top. Right now I'm trapped out. Pretty strong sell-off, surprisingly strong. So first bounce will probably fail. We might end up forming a triangle. Bulls trying to hold a higher and low 41. Bears obviously want to get below 41. I don't think it matters either way, because I think we're in the buy zone, just like we had the sell zone around the 4 high. The buy zone is around the 41 low and the 11 low. The market's trying to get below the 41 low, but probably buyers there and buyers down around 12. Whenever the market tries to reverse down, but the rally is particularly strong, usually the first reversal, even if it's strong, is limited, minor, and usually the bulls get a bounce. And that's probably what's going to happen here. This is too strong, so the odds are against this being the start of a bear trend. Bulls want this to be a repeat of this, an abrupt reversal that goes above the prior high. Not likely. So I don't know how far up we go here, but we're probably not going above this high. And the best the bulls probably will get is a lower high and a triangle. 1, 2, and then 3. Bulls want 60 to close on its high, but it probably will not. They want it to close on the high to reverse 58, but more likely will stall in this tight trading range. We spent a lot of the day there, and we're back in there now. For the bears, a pullback from the bear breakout. We have a bull channel, bear breakout, and a pullback. A lot of bears will not sell this low in the trading range, especially since we're back in the earlier tight trading range. And especially since this rally was strong enough to make a bear trend unlikely. Therefore, probably buyers not far below. The bears want to sell higher. Getting back up into that sell zone, the 4 high, sold up around it here and around it there. But, I still think we're going to stay in a trading range today. The bears have a lower high major trend reversal, but too many bull bars. So probably a minor reversal and a trading range. Trading range days, always trying to get traders to buy breakouts that reverse bull breakout, bear breakout, bull breakout, and traders should be doing the opposite. They should be looking to sell when it's near the top and looking to buy when it's near the bottom, and in general scalp. Whenever there's a major trend reversal here, a lower high major trend reversal, it usually ends up bouncing around the neckline. So you usually get both a double bottom bull flag and a lower high major trend reversal, and then the market is in breakout mode. Strong enough reversal, probably buyers below and a higher low. But sell zone, bear scalpers will sell up here for any reason, looking for a pullback. Bulls want to break out above the neckline of the double bottom bull flag. They want today to end up as another good bull bar on the daily chart. Daily, weekly, and monthly charts very bullish, but potential for a reversal into the end of the week after last week was a doji bar. 60-minute chart, no sign of a top. Tight trading range after a very tight bull channel, unlikely to go down without going up a little bit or going down a little bit. And, this probably has to become more of a trading range. Right now it looks like a bull flag, only 5 bars sideways. Plus we have that measured move target above. The bears tried to get a wedge top. We got a bull breakout. It makes it tricky to trade when it reverses as abruptly as it did down here and up here. I said the lower high major trend reversal was probably minor because too many bull bars and too tight a bull channel, and that the bears would need a double top. Well, this is a double top, but it has the same problem, too many bull bars. So even if the bears get the double top, it's still only a minor reversal. Trading range more likely than a bear trend. Neckline of the double bottom bull flag. Bulls want to break out and a measured move up, hoping for another big bull day. But a lot of the bulls will not buy on the stop here. They'll wait to see if we start to get bigger bull bars closing on their highs. Limit order bears might sell the 54 high, but not a very good sell because this reversal up is as strong as it is. Double top, lower high, major trend reversal, but the same problem as here. So I would not sell below 64. If we go sideways and get a micro double top, then I might sell. Because most bears want a micro double top, they're buyers 65 low and probably a 50% pullback and around the moving average if we get there. A high one buy, 66, but a bear body, 3 bars with tails at the top. And the top of a trading range, so not a good stop order buy. Probably buyers around the moving average, around a 50% pullback. Probably in the buy zone, around a 50% pullback. The bears have a double top, lower high, major trend reversal, but both rallies are too strong. More confusion up and down, probably sideways here. Slightly more bullish than bearish. We have a higher low, 59, compared to 41, and we have a higher high here. But still probably going to stay sideways for the remainder of the day. Might get closer down toward the open and make it a weaker bull day on the daily chart. But right now, to me, this looks like a bull flag, but a lot of bulls will want a micro double bottom before buying. %, bulls, if they bought with a limit order, made money, right? Fell a couple ticks below and then bounced. Stop order bulls for a breakout. They see this as a bull flag. This is a bull flag from this reversal. I don't know that it's worth a stop order unless you're willing to put a stop, protective stop down here below 59. Final hour, trading range day, open of the day is a magnet. Right now, I think we will not get there without first bouncing because we reversed up strongly here. But that is a magnet at the end of the day. The bears want the day to close below the open, and therefore the daily chart would have a bear body after a buy climax, and traders would see it as a parabolic wedge, 1, 2, 3. Limit order bears who sold the 59 high, some of them will buy back their shorts. They sold here, sold more for any reason up here, and they're buying back their shorts here. Bears are trying to get down below the open. This is a pretty good bear bar right now, increasing the chances that we'll get down to the open. In a trading range, you often see a big bear bar near the bottom or a pretty good bull bar near the top. And it's really tempting to assume that the market's in a trend, but usually it's a bad idea to sell big bear bars near the bottom and buy big bull bars near the top. So as good as 69 is for the bears, you got to look to the left, and it's too close to the bottom of the range. You see a lot of traders bought the close 69 for a scalp, betting against the successful bear breakout. Can you buy above 69, taking a chance? It's like 60. I don't know. I'm not going to do that. Everybody's scalping. The market is not going very far up or down. Open of the day is still a magnet. Running out of time, but I still think 50-50 chance we're going to break below the 41 low and get down to the open. I don't know if we'll close down there, but I think we'll get there. Reversal, but unlike 8 closed on its high. So this is not as strong a reversal. 60 closed on its high, 42 closed on its high. So this is not a strong reversal. Obviously, if 71 closes on its high, then it becomes more credible. Bulls are hoping that this is just another bear trap and higher low like this, and that we go up to a new higher high. But enough of a reversal down, probably we'll get a lower high this time. Pretty good reversal for the bulls, just like a lot of the bulls did not want to buy above 70. A lot of the bears will not want to sell below 72. We're in the middle of a 5-hour trading range. Bad location to do anything. However, every time it goes up, traders look to sell. Every time it goes down, even if it goes down strongly, traders look to buy. Right now we're in the middle of the range instead of near the top or bottom. The bears should not have allowed 70 and especially 71 if they're going to be able to get the market back down to the open. Very difficult to do anything right here. Late in the day, So not great math for selling the 73 close with a limit order, but most traders do not want to be holding long or buying in the top half, top third of a trading range day. Bulls trying to get it to close on the high. Even though it's a trading range, we have higher lows here both times and a higher high here. And the bears have been unable to get it down to the open. It's really difficult to do anything here. Maybe buy the 74 low, but even then, that's not all that great because you're still buying in the middle of a trading range. And look what happened if you bought below 54 a doji or below 65 a doji. Even though there was a strong rally before both of those, very difficult to make money here unless you're really aggressive. Another high. This is a small breakout of a small breakout, and we're trying to get a reversal, and that's typically a wedge pattern. But to me, the sell is below a bear bar, and selling below 77 is selling really low in the day. When you have a trading range and you have a small breakout above the top, and the prior top was a small breakout as well, that's a pattern. It's a small breakout of a small breakout. And it operates like a wedge. And very often, if you get a reversal down with a decent sell signal bar, traders will look for a measured move down. We don't have enough time for that today. Small breakout with a small breakout, decent sell signal bar. The bears got their reversal down. Here, a small breakout of a small breakout. The bears could not get their reversal down. The bulls got a breakout, and we got more than a measured move up. Small breakout of a small breakout. We got one more bull breakout, and then a reversal down to the bottom of the range. This is what the bears want, but there's not enough time for the measured move down today. Might get it tomorrow. Bears unable to get below the bear bar. So for me, this has not yet triggered. That triggers the sell, which is selling pretty low in a trading range, which is not what you want to do. I thought it was an interesting day today. Unfortunately for me, I was on the phone with TradeStation during this first hour, and I ended up not taking those trades. The one trade that I would have taken was probably buy above 8 for the double bottom with 1, or buy above 12 for a couple points. So both times I probably would have scalped for 2 points because I thought a bull trend was unlikely. 60-minute chart, tight bull channel, biggest pullback only a bar or so. Unlikely to go into a bear trend without first going sideways. We're sideways now, but right now it's more likely a bull flag than a top. Not enough bars for it to be a top. If we get a big reversal down tomorrow, then then traders will look at it as a possible top. But right now, more likely we'll go at least a little higher. The bear's trying to get a wedge top here, 1, 2, 3, and they get a bull breakout. So we still have a target up here. I don't know if we'll get there. I think the weekly chart is still interesting. We had an unusually big pair of bull bars here. They're not all that big, but compared to the bars, the 50 bars or so, the 100 bars or so before them, they're pretty big. And a pair of big bull bars late in a bull trend, more likely exhaustion than a measuring gap. So more likely an exhaustion gap. The gap right now is the low of last week and the breakout point over here. And it probably will close before we go much higher. Strong enough breakout, you often get a second push up, which we're trying to get now, but probably not much more up. So I think we're going to get a reversal either this week or next week. This week, we have 3 days left for a reversal. In other words, right now it's a bull trend bar, and reversal, maybe down to a new low and get a bear bar. We have a tail on the bottom here, and then possibly a tail on the top here. If instead we get a bull trend bar this week, then maybe we'll get a bear week next week that reverses this week, so we'll get a 2-bar reversal. Daily chart, we had a very big buy climax here. This was possibly a final bull flag and a parabolic wedge. The bears are trying to get a decent sell signal bar today. They're trying to get today to close below the midpoint. That is the minimum for a reversal bar, and they would rather that today close below the open. And although it does not look likely, some of these bars are pretty big, so it's still possible we get all the way down to the open before the end of the day. Yesterday, we had a very strong rally at the end of the day especially, but parabolic wedge, so there was a risk that we would reverse down. It's possible we reversed down the open, but we got some follow-through buying here and then a reversal down. I talked about how bar 1, 2, 3, 4 all buy the close, but it was really risky because it was a parabolic wedge rally. We have a series of buy climaxes here, here, and then here, a third buy climax, and a tight bullish channel, especially in a very overbought market, is a parabolic wedge top. It can keep going up, but it has an increased risk of reversing, and we got a very abrupt reversal below 4. It was reasonable to buy closes 3, 4, and therefore, if you get an abrupt reversal 5, you're probably going to get back up to that 4 close at some point. The 3 big bear bars, 5, 6, 7, I think that is enough to make a bull trend day unlikely, even though you get a double bottom, 1 and 6. 5 and 6 are just too big, and when you get that kind of aggressive, sudden big selling, the day usually does not end up as a bull trend day. Right now we're above the open, so you can say, well, it's a bull bar on the daily chart, and therefore it's a bull trend day. But right now the open is, the close is not far above the open, so it's more of a doji day. So yes, we rallied and we're staying above the open, at least right now we are. But I think of it more as a trading range day, and I think of it as being a trading range day because of the strong selling that we had here. Big up, big down, big confusion. Confusion is one of the hallmarks of a trading range, and it made either a bear trend day likely or a trading range day likely. Since we rallied so strongly here, a trading range was not likely. So if a bull trend day is not likely and a bear trend day is not likely, you're left with one thing, a trading range. The bears got a lower high major trend reversal here, but you see this problem all the time. Too many bull bars, the channel too tight, the reversal is probably going to be minor, and the bears will probably need a double top. They got their double top here, but the rally looks the same as this, so the problem is the same. Too much buying pressure, and therefore a reversal down is probably minor, which means a trading range and not a bear trend. This rally is weaker, and therefore the bears have a better chance of a bear trend, but not enough time for a reversal down today. Stop entries today, well, above 1, not great. Below 4, not great. Below 5, if you're really quick, maybe, but not great. And then above 8, I thought was the first reasonable stop entry trade today, a buy, because you had a very strong rally yesterday. And this was probably a 50% pullback of that rally. And we have a double bottom with 1 and 6, and we had good early buying and a bull bar closing on its high. And then above 12 as well, a pullback from the bull breakout. We have a double bottom bull flag, and this is the breakout, and this is a pullback. And then up here, not great stop entry selling. We have a big bar, 18, possible buy climax, and the end of the move. It turned out to be the high of the day. Second entry short, 21, but another doji bar, so not great. And then selling off, I said 27 was probably a give up bar. We'd probably get at least a couple legs down. We did, 1 pullback, 2, but not much down. Can you buy above 29? Well, we're probably going to get a second leg down. Second entry buy above 34, but a 1-tick bull bar and a tight trading range, limit order market. Sell below 38, we're still always in short, but we're still in a tight trading range, and it's only 1-tick bear body. Bear break below the range and a reversal up to 41, but 2 dojis, not a strong buy. And then selling below 44, failed breakout above. I think this is probably the final bear flag, and we'll get a couple legs up, at least to the 4 high, the high of the open. 47, we're probably going higher, but probably not to a new high of the day. We'll probably not get above the 24 high. This is probably a bull leg in a trading range day. We have a bunch of bull bars, so selling below 54 is a low probability bet. Always better to sell below a bear bar, 56, 55, but probably a minor reversal because we had 7 bull bars here, 9 bars without a bear body. And then here, not a great buy above 59 or 60. Arguably sell to close 59, so the opposite of 4. 4, you did not get a chance to get out break even, so it's probably going back there. Here, the bears, 59, never really got a chance to get out break even, so it's probably coming back here. Just like 54, the bulls never got a chance to get out break even, so you get back up there. Stop entry, sell below, this is all bad stop entry trading. Tight channel, a lot of bull bars, low probability sell, low probability buy, low probability buy, low probability sell. Yet they all worked. Buy the close, sell the close. Well, 1, 2, 3, 4 are all buy the close, but I said I would not take it because I thought we were forming a parabolic wedge and I thought we would pull back. 6, 7, probably sell the close, but I wouldn't do that either because with a rally as strong as this is, very unlikely we'll go straight down. It's probably going to be big up, big down, big confusion, which means we'll probably bounce. And I don't want to be selling too low, and I don't want to be buying too high. Not really good buy the close here, not really good sell the close here, and same all day. So if anything, it's opposite. Anytime you see a big bear bar, you look to buy, especially if it's near the bottom of anything. Anytime you see a good bull bar, especially if it's near the top of anything, you look to sell. But beginners cannot do that because they cannot use a wide enough stop and they'll get too upset and they will not manage the trades correctly. However, look at bar 18, bar 52, 18 the best bull bar in this rally, 52 the best bull bar in this rally, 63, 76. What happened? They all reversed, even though they were good bull bars. They were good bull bars at the top of a trading range. And the opposite is true at the bottom. 6 near the low of the day, possible trading range, and then 58, 71, 69. Traders bought the closes and did not sell the closes. Limit order trading, probably sellers above 7, and if we get above the high of the day, probably sellers above. I would not sell above 7 after I see 8 micro double bottom, a double bottom 1. We'll probably get up around the 4 low, where the buy the low bulls started to scale in, and we'll probably get up to the 4 close. So first limit order trades, probably the 10 low, 3 consecutive bull bars, and we're probably going up to the 4 close. And then 14 low as well. If you're aggressive, 3 bear bars, tight trading range, sell above 22. And then here, it's all limit order trading. Probably sellers above 30, buyers below 30, and all the way through buyers below 29, sellers above 32, sellers above 44, sellers above 54, sellers above 65, and buyers below things, below 50, below 47, below 45. And that was how the day ended up. Right now, 5-minute chart. Strong bull trend in a trading range. On a higher time frame chart, like a 60-minute chart, you can't see it, but it looks more like a bull flag. On a 5-minute chart, you might say, well, trading range, breakout mode, 50-50 chance, bear breakout, 50-50 chance, bull breakout. In general, that's true, but when it's in a strong bull trend, especially a tight bull channel like that on a higher time frame, the odds still favor a bull breakout over a bear breakout. If you're just looking at the 5-minute chart, you'd say 50-50 chance measured move down, 50-50 chance measured move up, based upon the height of the range. I'll get rid of these lines. The market ignored them. But 5-minute chart, breakout mode. I still think it's slightly more bullish, even though it's a small breakout of a small breakout. It's still higher highs and higher lows. And if you look to the left, for the last time things were clear, it was here or here. The market's always in long. So even though we get a lot of bars, I think it's still slightly more likely that the bulls will get a breakout than the bears will get a breakout. How much is slightly? Like 51%, 52% bulls, 50, 48% bears. Daily chart, let me just check the middle of the day's range. Here's the low. Here's the high. The bears want the close below the middle. In my mind, if it closes below the middle, just a little bit below the middle, I think the day is just a little bit more bearish than bullish. If it closes just above, I think it's a little bit more bullish than bearish. Okay, don't see any questions today. January, let me say one thing about January. As a month, incredible month, huge bull bar on the monthly chart. And whenever you get the biggest bull bar late in the bull trend, it's probably a climactic end of the trend. Someone asked the other day, if you have a buy climax top, does it lead to a bear trend? Usually not. It usually leads to a pause in the bull trend. And then if it pauses for enough bars, you can get a micro double top or a lower high or some other kind of a topping pattern, and then you can get a reversal. But when I see a buy climax, my thought is, okay, the bulls will take profits, the strong bears will sell, and will probably become more neutral. It would be extremely rare for a bull trend, 15-bar bull microchannel, to become a bear trend without first going sideways and forming at least a micro double top. For a micro double top, you need at least 2 or 3 months, and therefore the downside risk over the next 2 or 3 months is small. It might get to the bottom of this bar, which is 140 points down, but on the monthly chart, that's nothing. That's just a bull flag, a pullback. So this is really fascinating. Last year we did not have a pullback all year. This is, I think, the first year in the history of the stock market when there has not been a pullback all year. It's not the first time when the market has had 12 bars without a pullback, but it's the first time that every bar in a year has not had a pullback. If you look back to 1995, I'll put up the cash index because the E-mini did not exist then. 1995, we had a 13-bar bull microchannel here. It started December, so ended February the next month. So I can't see if there are any pullbacks here. Oh, I think there's a pullback here. But anyway, let me just take a look at that. Yeah, here's the pullback. So we had a microchannel from here to here, and this was December. Yeah, so December to December. So 13 months without a pullback. So that's an entire year where every bar is has a low at or above the low of the prior bar. So this is the second time in history when it's going on for a month. This rally lasted 13 months and then had a pullback. The current rally is 15 months and no pullback yet. And you can see what happened. Pullback, pullback. It started becoming two-sided, and then we had a correction here. This correction was 4.6%, about 5%. I think we'll probably get a 5% correction this time. But look how long after the pullback the correction came. This is December, and this is July. So you had to wait 7 or 8 months before you got any kind of a pullback. Do I think it'll happen that way again this time? I don't know. The market right now is doing things on the weekly and monthly chart, daily chart as well, that it has never done before. It's never gone this far without a correction. But there's no sign of a top yet, other than a big bar, a buy climax on the monthly chart, a pair of big bars on the weekly chart. I have one thought about extreme buy climaxes and extreme micro channels. If you start to get too many bars, if you're 5, 7, 10, 12 bars, the first reversal down is probably going to be minor. But if you start to get a whole bunch of bars, 15, 20 bars without a pullback, I think it increases the chances of a deeper pullback. This is a 5-minute chart, 17 bar bull micro channel, and then sideways for a dozen bars. So instead of just pulling back for 2 or 3 bars, it went sideways for 10 bars, 15 bars. 14 bar bull micro channel and a big reversal down. When you have too many bars in the micro channel, it's just too extreme. And when you get the correction, it either lasts a long time like this, or it reverses much deeper than you want like this. And I think that's the risk. Here, 25 bar bull micro channel, and then about a 20 bar trading range when it finally ended. And that's my one reservation about the current bull micro channel in the monthly chart, that it's going on too many bars, and therefore when it corrects, instead of the usual 1, 2, or 3 bar correction, it may correct sideways for a year. It may do this, go sideways for 15 bars. It may be deeper like this, 20 bars down. I don't think it'll be anything like that, but it may be more than just the usual 1, 2, or 3 bar pullback in a bull micro channel. Bull micro channel, here we got a 2 bar pullback. Bull micro channel, 1 bar pullback. Micro channel, 1 bar pullback, right? That's what you typically see. But this is so extreme, I think it increases the chances that the pullback will have more bars and be deeper than what is typically than what you would typically expect in a bull micro channel. All right, hope everybody has a good night.